Gold, silver, and the mining stocks are getting crushed today. What is going on? How come gold is going down? Oh my goodness, that's it. It's all over. Yes, you are right. It is all over. For the short term anyway, right? Let's get into today's analysis and today's video here, guys, because I really want to share something with you. Right now, we are getting some real strong weakness. We're starting to get some weakness out of the mining sector. We're starting to get weakness out of gold for the last 3 days. And we're starting to see this happen right now, right? And so one of the really big, interesting things is that if we look at how these markets operate as a whole, you'll be able to see, if you followed me now for the last week, okay, even for the last week, you would know that I gave you one simple technique, right? One simple technique to help you take the confusion out of the markets and also anticipate what is coming next. This is where it gets so powerful about what I'm teaching you guys. I teach you one simple thing that told you that with the mining stocks and the metals, we should get at least a bit of a pullback, a little bit of a drop out of the market, and don't be alarmed. Now, this is a short-term pullback. It's not a change in trend. It's a short-term pullback. And I told you all about this, right? So one of the really big things, and now traders, I have a complete massive trading course. It's like 8 videos, 5 hours long, teaching you a lot of things about these markets. There should be a link in the description. Make sure you grab access to that. It's a free trading course. Here's the thing about trading, okay, guys, that I think a lot of traders are focusing on everything but what the market is doing. And it's only because I've gotten access to now some of the most powerful techniques out there. It helps me understand not only what is happening in the markets, right? But also then, therefore, if I know what's happening, I can get ready for what's likely to come. Now, I know that sounds voodoo to a lot of people out there, but again, if you've been watching me now for the last week, you would know I've been teaching you one simple technique. One simple technique that took the confusion way out of these markets. It had nothing to do with a theory or opinion or news or data or Trump or, Fortnite or this or that, anything. It was one simple technique on the deepest level of how these markets work. And this is where, when it comes to, I have a coaching program, right? If you want to get access to it, you can apply for it. There's a link in the description there. But I'm with you every day, basically, right? And my whole job is to teach you the most important thing. You know the 80-20 rule, right? So the 80-20 rule in the market simply states that only 20% of the stuff out there is really going to move the needle. So the big thing I've been teaching you guys is what's called the energy phases in the markets. And the reason why this is so powerful is because this drop we're seeing right now, you would see this coming a mile away. Not only that, but then the mining sector has been coming back down through here. Why has the mining sector been dropping now for the last week? Gold mining stocks down, GDX down, SIL coming back down as well too. And same for the SILJ. Why are we getting this movement on the downside? Is there anything out there, especially with the gold chart, is there anything out there that could have given us a bit of a warning sign to say we are about to see a bit of a drop in the markets coming real soon? And just knowing that that's likely to come, and when it starts to happen, aka the last few days, it's starting to get a bit of weakness on the downside. When that does happen, you're not freaking out. In fact, you're not only freaking out, you're expecting it, and therefore you'd want to not be getting into trades at this particular time, especially if you're a shorter term trader. I mean, you're looking to get in, buying options and hold it for a few days, maybe for a week. You would know it was the wrong time to be getting into gold. And this is what I've been screaming. Serious alert around these markets here. So the one thing that I've been really talking to you about is what's called the price and is what's called the energy phases. Okay, so there's two main things I really want to sort of one main thing I want to double down on, which is the energy phases. But then also I want to teach you another technique that sort of helps me get in and utilize some really good techniques here. All right. So the first one I want to teach you, which I haven't talked about in a long time, which is the moving average, right? So this is a 52 moving average. Now, I'm looking at a daily chart. So this is a 52 moving average on a daily chart, right? People are like, is this a 52 month moving average? Well, if I'm looking at a monthly chart and I've got a 52 moving average on that chart, that's a 52 month chart, right? Whatever chart I'm looking at, it's like I'm looking at a daily chart, therefore I'm looking at the 52 on that chart. Here is the thing, okay? Here's the thing. Looking at this whole thing through here, one of the big things that helps me know when it's a really good time to get in and when it's a time to eject is by looking at the moving average. That's one. I'll teach you the second one here in just a minute. But the first one is this. Notice this here. Right now, again, this is for people that are traders of the markets. People that, right? Long-term investors, don't listen to anything I say. I'm a short-term technical analysis trader. Right? I'm looking to get in, hold it for a few days, hold it for a week or two, and make a profit. That's what's called trading for income in the markets, right? Long-term investing, you have a completely different approach, a completely different system. But one thing you'll notice here from a short-term technical analysis perspective is what? Whenever you see the market have a nice, what's called an energy using phase, right? So when the market goes up through here, it's using energy, and then eventually what happens? We run out of energy, right? And then we need to have this drop through here, bit of a pullback to then build the energy. What's happening right now? We're just starting that little pullback. We may continue down, we may go sideways, but the bull phase is over for now. For now. I say bull phase, guys. This is a bull phase. Now we're going down a little bit. The bull phase is over. Bull phase, bull leg. This here is a bull phase. Now we're going through the pullback phase. Now we're starting the pullback phase. That's all. Not a complete change in trend, and that's it, right? And this is what's been happening for the last week, right? The facts are we've been going down we've been slowing for the last week, meaning we're just going sideways on gold, and now for the last couple of days we're starting to see a bit of a drop on the downside. And the mining sector is getting hit pretty hard for that reason as well too. But you'll see that whenever we go through these very big sort of acceleration, energy building phase. I was just thinking about how can I say this to make sure that I don't complicate it for you guys. So whenever we go through this energy using phase, the market goes for a big move. Whenever we get too far away from the moving average, look what happens. We end up coming back to it, right? We end up coming back to it. Come back to it. So it's nothing set in stone and perfect, but if we do notice, just by looking at this chart, by one moving average, and that's it, not your indicators and stochastics and MACDs and RSIs and commitment traders report and all that other crap. Stop complicating your trading. The reason why I do well at trading because I'm not complicating it. I keep it simple. If you guys want to keep making life hard for yourself, then keep trading an approach that has no probability. I see so many traders that, the way they're trading is completely wrong, right? Which means like this one trade is based off this one approach. This is a 4.5 year cycle. That's why I'm trading this stock. And the next stock, I'm trading this because commitment trading report said so. And the next stock, you're trading because you watched the YouTube video. And the next stock you're watching because it's a stochastic breakout strategy. See what I'm saying here? There's no rhyme or reason. Where is your consistency? You want to be a professional trader in the markets? Consistency, discipline, and patience. You know that. Where is your consistency? You want to be the top 1% of traders? You want to start making at least 6 figures and then eventually get into where a lot of us are, with the 7-figure range? Where is your consistency of one approach? It's not about being lucky, right? It's not about, I got it right. I got lucky, right? That's all it is. It's just got lucky. What I do is every single time, I'm in a trade right now. And do you know, I got into a trade yesterday. It's the exact same trade that I took that only a few weeks ago I got out of a trade, that the exact same trade, the exact same pattern gave me 170% return. That trade that I got out of a few weeks ago, I was in it for a month or more. The exact same pattern that made me 170%. Guess what? I'm not guessing. Another trade just like that appeared. And I don't know what's going to happen in this trade. It could be another really big profitable trade for me. But it's the exact same thing. I'm no longer guessing. So many traders make trading so hard for a lot of traders is because you're guessing around these markets. Stop guessing. And one of the things is that once I'm saying here is that if it gets too far away from the moving average, you know how markets work. We're eventually going to come back to it. So when will be the best time to look for some trades? When we start to come back to the moving average, come back to the moving average, come back to the moving average, come back to the moving average. That's when the perfect time to look for a trade, right? It's not when we're so far away from it, because guess what's going to happen? We're probably going to start to come back to the moving average. Guess what's happening with gold right now? We're coming back to the moving average. So this is one simple thing, is the moving average. And then you overlay that when it comes to the energy using and building phases. We talked about this before, right? And we even talked about this even with the mining sector, right? It's something really, really, really big even with the mining sector. And I'll blow this chart up from here, right? And let me use this one here, right? Now, once again, how do markets work? They don't just go straight up, right? We go through these different phases. We go through a movement phase. So if the market's going up, we have a strong move up. That's what's called an energy using phase. The market's using a lot of energy. There's eventually come a time where you're going to start to get tired. You're going to run out of energy. And then you're going to get what? And then you're going to start to go through a bit of a pullback, which is called the building energy phase. What's happening with GDX right now? You guys know, you've been following me again. If you've been following me for at least a week, you would know I've been saying, get ready for what's happening in the mining sector right now. What's happening with gold and silver right now. This is not a shock. Now, I'm not calling for a complete meltdown and if that's it, the major tops in. No, it's just how the swings of trend analysis works. Did you get what I just said there? Up, down, up, down, up, down. These are major higher lows, higher lows. Yes, that's higher lows. But how does the trend actually form? We go through the energy using phase and then we get tired. Then we go through the energy building phase and then it forms a higher low. See what I'm saying? Like this is the trend analysis, higher lows of trend, but for how the trend is formed is what? Just what's happening with the GDX right now. Nothing too complicated. We had an energy using phase. Now we're just going through an energy building phase. This was expected. We're not shocked. You were expecting this. Can you see how powerful this stuff is? Two things, or actually a few things I'm teaching you right now. All right, we talk about trend analysis, but our trend is formed by going through these energy using, energy building phase. And probably what's going to happen here soon is we're probably going to hold here soon. We have a little bit more downside to come. And we're probably going to form a higher low here. Maybe. We'll see what happens. Right? But that same, and especially like with the gold market, look how vertical this has been. And every time we've gone vertical, we get the pullback. We're just getting a little pullback here. Not a top in the market. We could probably get a bit of a pullback and then hold and maybe even go for another rally again. But all this is from a short-term trading perspective. And the reason why I've been really driving deep into this level here is because I know so many people, they wait for the market to do this. And then they're like, oh my goodness, it's been going up for all this time. Let's get into it right here. Right? And you do your thing, right? And then what happens? The market drops on you and you're like, oh, this market's so rigged. People wait for the market to go up first, but the foundations of how these markets work is it goes through these swings and motions and patterns. And once again, when you go through what I talked about here, one simple thing you can do is put on a 52 moving average. Why 52? It doesn't matter. Use a 60 if you want. Use a 50 if you want to, right? It's just a longer term moving average on the chart, and you do know that when we start to get too far away from the moving average, we see this all through here. When we start to get too far away from it, we just need to come back a little bit, right? To get back to a bit of equilibrium, build a bit of energy to get ready to go again.